Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. Also have another channel called Best of Us in Retirement. But on this channel, I talk about the stock market and what my interpretation of what's going on and how I can profit from it. The biggest income I have and on an annual basis is from my portfolio. But I'm confused. I expected the market to pull back today and yesterday as far as that goes, and it isn't happening. And I'm confused. And I want to openly share with you my confusion and what is causing it and see if you can help me come to a better understanding of what's going to happen between now and the end of the year and beyond that. I picked up this morning's Wall Street Journal. I read it every morning. And over here, there's an article. It says, Fed prepares to pull back on stimulus. That immediately caught my eye. And I sat down and read it. And stimulus to me had meant the checks that the federal government was sending out last year to anybody and everybody. Stimulus to me was the unemployment checks. I guess you would call it the government subsidy of the state governments for unemployment checks. And that's what stimulus meant to me. And I said to myself, I don't understand because that's already ended. We haven't seen any more $1,200 checks coming, and we already knew they were cutting back on the unemployment. So what does that mean? And what it means, what I realized as I read the article, is that the Treasury is going to cut back on their monthly purchases of treasuries and of mortgage-backed bonds. Okay, so I read deeper and did some research, and I want to try to bring this into perspective. I want you to imagine that you own a grocery store. And over the last year, the federal government came into your grocery store and bought every month $80 billion worth of oranges. And then they went over to the produce department or to the meat department, and they bought $40 billion worth of meats. Okay? And they announced today or yesterday that they were going to pare back on their purchases in your grocery store. They were going to pare back on a monthly basis to reduce the amount of monthly purchases of produce from 80 billion to they were going to reduce it by 10 billion a month, and they were going to reduce their purchases of meats by 5 billion a month. Now, what puzzled me was when they made that announcement yesterday, the stock market rallied. What? And I say that the stock market is your grocery store. Okay, the value of your grocery store rallied yesterday on the news that the federal government is paring back their purchases of produce and meats in your store. Does that make sense to you? It didn't to me. It didn't make any sense. So I wanna dig into it deeper in this video and see if you and I can't come to some understanding of why the market rallied on the price of our grocery, the value of our grocery store, when the federal government just announced they aren't going to be buying like they have in the past. So let's talk about that. First of all, I'm not your financial advisor. I'm a retired financial advisor, but I'm not yours. I'm here for education and entertainment. I'll be right back with you.
Best of Us Investors presents Kerry Grinkmeyer.
I'm a pretty simple minded individual. I have to understand things on levels that I understand. I don't understand the federal government's expenditures. I don't understand why they called this a part of stimulus. I guess I do. I just didn't consider it a part of it. But I want to try to bring it into perspective as I see it. I do that by using a chart that I have on tradingviews.com that kind of maps the history from back 2000 to today and what drove the market so I can get a better handle on what's then going to drive the market in the next 20 years. I'm really more interested in the next 3 to 5 to 10. So let me take you to that chart and another chart that I discovered relative to the expenditures from the federal government, the Treasury, and the stimulus that they're spending, and see if we can't make some sense out of this. So let's go look at the charts. If you've been to my channel before, you've seen this graph. This is something I put together on tradingviews.com, and there's a link to it if you would like to duplicate this graph. I use it to give me a handle on what's driving the stock market, and I update it on a regular basis. In red, I'm showing what I think from a technological standpoint is driving the stock market going back to 20 or 2000. I then in blue show the influx of capital from the US debt into our economy. And as you can see, I start in 2000 when we had a $4 trillion debt, and I follow it up to 2020 when we've raised that to 20 trillion from 4 trillion, and then I take it up to today where we are at 28 trillion. And my contention is that the federal government is financing the tremendous growth, in this case, of the QQQ, the NASDAQ market. And that's where I invest because that's where technological disruption is. My contention is, though, that it's a false economy because the federal government is financing it. Now, that doesn't, because it's a false economy, doesn't say to me, I'm not going to invest in it because it's going to implode. No, I think what it does is it says to me, I need to follow the money. I need to have a barometer as to what is the Fed going to do next and how is that going to affect my chart. And so that's how I go about it. Now, as you can see, I've put some other events, if you will, in here. This is 9/11. This is the $2.3 trillion that our government spent to finance the Afghan war. And I make note of that because just recently we have pulled that money out, and that money is going to go somewhere else. It's in the defense budget, so it's going to go somewhere else. So I need to know that and try to figure out where that 2.3 trillion over the next 20 years, because it's in our budget, where it's going to go. Okay. Now over here, I show you that's in the balance right now is Joe's asking for another 3.5 trillion. And I think the revolution, the next event that is going to affect our economy is our change in healthcare. So that brings you up to date. Now I want to take you, as I said, I read the article in today's Wall Street Journal, that today being Thursday, September the 23rd, that the Fed is going to taper back and that, in fact, they're going to raise interest rates. Well, I needed to understand, what does taper back mean? So I want you to look at this graph. This is a graph put out by Fred. It's an economic chart. And what they're showing us here is the assets that are held by the U.S. Treasury in securities. And it goes back to 2014. And you can see here in 2014, this is in millions of dollars. So it's $664 billion that would be, and that is in 2003. And then you can see it kind of runs on an even keel. And then as we get into the subprime crisis in '08, they actually drop down. And then to get us out of the subprime crisis, the Fed starts buying assets, and it goes and it climbs, and then it just catapults. This is February 26th. You can see the Fed owned 2.4, almost $2.5 trillion in securities. What is that? That's treasuries and mortgage-based bonds, okay? And then as of September the 15th, that number has doubled. That doubled from February 26th of 2020 to September the 15th of 2021. So that means they have $5.3 trillion worth of assets that they didn't have, they have doubled it in about a year and a half. And what's important to me is yesterday they said they're going to pare back. Okay, that's the key. And the numbers they gave is by June of 2022, they are going to stop buying. Right now, they are buying approximately $80 billion of treasuries a month and $40 billion of mortgage-backed bonds a month. When they stop buying those, what does that do to our stock market? What does that signal to me as an investor I need to be aware of and build into my graph here? Okay, what's going to happen as a result of the Fed paring back? What's going to happen relative to if Joe gets his 3.5 or he doesn't? That's what I'm trying to decide, and that's what I want to talk to you about right now. Okay, let's bring you back to my grocery store. You've just had a record year. In fact, your sales have gone crazy because, as I said, the Fed is buying produce and meat from you at exorbitant rates, and you're making a lot of profit. They aren't price picky. So now they have announced that they're going to cut back on their purchases, as I showed you, and at the same time they're going to be raising interest rates on you because they hold your mortgage. Okay, so your sales are going to go down, and the cost of your mortgage is going to go up. So your inflow is decreasing, and your cost of running business is going up because they're projecting that by this time in 2023, your interest on your debt is going to go up by 1%, and by 2024, it will go up 2%. How does that cause the value of your store to rally today? I don't understand that. So I'm looking at this and saying the market isn't really understanding what the Fed has just said they're going to do. And unless this spending is replaced by something else, I'm not going to sell as much produce and meats as I did from 2020 through 2021. I just can't. How am I going to replace that business that I was getting from the Fed? I don't see it happening. So with that in mind, I think the market is probably going to recognize this, and we're going to have something of a correction. I foresaw this when I saw, and it wasn't I foresaw what the Fed was going to do. I foresaw that Joe was going to have some difficulty getting his $3.5 trillion package through, which I foresaw as the means by which to keep the market growing. Now, I think eventually Joe will get some of that through, but between now and the end of the year, I think there's going to be a pullback. There was something of a pullback in the last week. And I was anxious because I had taken $200,000 out of the market, and I was anticipating that I would be able to buy back in on some of my high tech stocks at a discount. But the market now today is showing some strength based on this information. Again, the headline in the Wall Street Journal is Fed prepares to pull back on stimulus. Market rallied. I don't understand that. I hope you do. I hope that you can help me on this. So I'm going to ask you to go into the comments and you tell me why the market is rallying on this and why I'm wrong that the market will actually pull back once the world figures out that Carrie's grocery store isn't going to be selling as much produce and meats as it was, because his biggest purchaser has said, no, we're not going to do that anymore. Help me out with this. And if you want to discuss it a little further, come to Best of Us Investors and give me your email address and your name, and I'll invite you to come and talk some more at our Discord. Okay, I think this is interesting. I think this is the way to invest, is to pool our knowledge. You might convince me, so leave it in the comments. Why is this a good thing? Why did the market rally on this? And why am I wrong? Okay? Let's work together on this. Let's make investing a team sport. All right. Talk to you again tomorrow.